anyone who had money was evil, or anyone who had money was corrupt.
What trends do you see shaping the commercial real estate market in 2025, and how can investors prepare?
What I'm seeing in the trend for 25 and beyond is, what I learned is that you're capped, you're limited. Now, most people want freedom. For me to break from that, I needed to find a strategy on passive income. How can I get income while I'm sleeping, or if I'm sick, or if I'm traveling, that gives you your assurance in a sleeping pill that your obligations will be sorted. So that was a big mindset shift for me. And that allowed me to then, mindset's number one. It's like, if you don't have your mindset right, you have to get it right. And what I've realized that we've got programs, the programs from school, programs from your mates, your relationships. These are programs. Look at what your identity is for wealth. How do you see money?
That would be a massive relief for somebody who needs it, doesn't know how to. The information provided in this podcast is for general purposes only and should not be considered personal advice. Always consult with qualified professionals or experts in the relevant field for personalized advice tailored to your specific situation. Welcome to another episode of Catching Up with Property. In this episode, we have Sergio Zambrano to help us kick off this new year in 2025. He's a successful entrepreneur. He runs health and wellness business Changing Habits. He's a private equity business advisor and consultant. He has multiple sources of income, one of which I'm super interested to know more about, which is commercial property. Welcome, Sergio, and Happy New Year for 2025. Thank you for being here. So tell us a little bit about yourself.
Thanks, Scott, for the introduction, and I really appreciate being here. So I'm very excited. I'm Sergio Zambrano. So for people who don't know me, I'm an investor, an executive, and I'm very passionate about health and wealth. And so I believe health is wealth. And today we'll be talking about property, which is exciting.
That could be wealth and health. What does it all mean, like, around what you do? Because you're a private equity business advisor and consultant. And what does that mean?
Yeah, great question. So I wear different hats. So I help, as a private equity, I help business owners to be able to scale their business. And I do that through sales and marketing, introduce optimization and systems and integration. So we've helped three of my businesses. I've obviously got Changing Habits, and there's a lot of IP there. And I've helped the other 2 and 3 businesses to do the same. As an investor, we look at investment opportunities. So we either invest into companies or we invest into assets.
Assets being commercial
property.
Beautiful. For this episode, we're going to be targeting more towards that commercial property. Can you share a little bit about your journey into commercial real estate investing and what inspired you to take that path as opposed to maybe resi?
Yeah, look, I started with residential, and it was a great tool. But what I found was I needed something that gave me passive income. And so I looked at all the different strategies, went to all the events, and I had shiny object syndrome, because every event would tell you do property development or do Airbnb. And so when I really knew the best vehicle for me and my circumstances, I found that commercial property was the tool. And I did extensive research, and I found a mentor, and I just hanged out with that mentor for about a year or 2 just to learn all about commercial property. That's all I did.
Wow. Okay. And was there something in commercial property that made you go, this is way better than the other strategies?
Yeah. So when I honed down to, had an idea that passive income was important, then I looked at commercial property. Then I said, well, why is commercial more interesting than other asset classes? And the reason for that is it's more economic and rationale. There's no emotion involved. And so you look at the fundamentals and data, which is, what's the economic, what's the macro situation of the economy, what's the micro, what's our businesses doing. And so you make decisions based on the business, location, but also the tenant as well.
Yeah.
And if the business makes sense for that area, then that's when it piques my interest.
And now, in growing that commercial property, with your experience being a program manager, is that right?
Yeah.
Backgrounds as a program manager, and running businesses, how did that contribute to your success in growing your commercial property portfolio?
Well, as a business owner and owner of Changing Habits, you learn about sales and marketing, the importance of that. You also learn the importance of using data to make decisions. You also look one eye now, one eye in the future, and that's strategic thinking. So you've got being clear of what the outcome is and also understanding where you are. Then you can start inviting what's the right strategies to be able to get you there faster.
Yeah.
So that taught me a lot. And also, as a program manager or project manager, I've worked with great leaders across 5 different countries and finance companies and banks and insurance companies. One thing I learned a lot about that was leadership, the importance of leadership, self-leadership about yourself, what you do every day as a leader. And that empowers you what you need to do to lead others.
Yeah.
And once you lead others, then you can lead businesses.
Yeah.
And so there's a whole framework that I use and I teach that as well.
Yeah.
And that gives you some frameworks and systems to be able to implement. So I was very good naturally at doing that. But then once you had your mindset, then the strategies appears, then you have an action plan. And that's what program or project management is.
You've got one eye in the future and one eye at the back. It's like you're sitting in the driver's seat. You're watching the front, but you're also looking at the rear view mirror.
That's it. I had, the metaphor that I use is there's a reason when you're driving, the screen in front is bigger than the rear view mirror. And so you have to look at the past? Yes, you do. But there's a reason why the screen is bigger at the front. So always look forward. You can learn from your past, but always start to look at what's ahead of you.
Yeah. Lean forward, fail forward.
Yes, that's it.
So now around your commercial property portfolio, what was your first commercial real estate investment and what was the lessons that you learned from it?
Once I made the decision, I went searching. And did I know everything? I didn't.
Yeah.
And I went to network forums, events, Facebook groups, and I found a deal in which piqued my interest because the tenant was solid, the area was solid. It was an industrial site in a regional town. And I went into it. I put a price and term sheet together that got accepted. And then like anything, you don't really know everything until you actually go through your first experience. So that was my first investment. Did I make mistakes? Absolutely. And would I do things differently? Yes, absolutely. But my mindset was the right. One thing that I noticed that most people stop is they either procrastinate or they actually don't move forward because they need all the information up front. With commercial property, it actually works the other way. You actually put a price and term sheet first, then you go for financing, then you do your due diligence. And so that's something unwiring that I had to do as a resi to a commercial, was really change that mindset into make a decision, go ahead, and then figure it out later.
I love how, in commercial space, what you're just unpacking right now is you do it in reverse compared to a resi. You make your offer, then you get your financing, and then the deal's done. As opposed to in resi, you need to get your financing first in order to get the property to get the deal done. So you're giving yourself a lot of space.
That's right. What's really interesting with commercial is that you do the due diligence after it's been agreed. And what's great is that the due diligence uncovers little rocks, skeletons in the drawer. And then you've got the opportunity to either let it go as an investor, or you decide to renegotiate the price. And so this is where I think most commercial property investors don't know about, is that once you're guided into agreeing the price based on the yield that you think, the due diligence will uncover rocks, and that gives you information that you can renegotiate the price. And so I think that once you lean into that, the second thing is that you really need a good finance broker. So someone who's experienced, someone who's done commercial property, because they've got a really good relationships, as you know, with the banks, and they can get, depending on the area, depending on the tenant, they will get and secure funding for you. So that won't be an issue. Then you involve a solicitor who does the lease agreements, who reviews the lease agreements, who helps you with the due diligence. And now you've got a team. Team around you. And so at the end, you've got typically 21, 30 days to say yes or no. We've extended that sometimes to 40 days, 50, 40, because the funding didn't come through or there was some renegotiation on the price. But yeah, it generally works, and you try to strike a deal that works for both parties. It's not like you're walking away, one-sided. No, that's right. And I think that's the beauty of investing, is that if the deal makes sense for all parties, if you can structure a deal that works for everybody, then you'll get more deals. You build your brand, and you also come out, as more of a savvy investor.
And more people want to work with you.
Absolutely.
And then word gets around, they start throwing deals at you.
Well, they do. And it's happened a lot now. Yeah, that's right.
Now, when you're looking at commercial property, how do you identify those opportunities? Are there specific factors that you prioritize over others?
Yeah, it's a great question. I always start with mindset first. So, for example, commercial, once you uncover the fundamentals of commercial, there are different types of risk profiles as a commercial investor. So once you identify that, you could be a high risk, medium or low risk commercial investor. So once you identify that bucket, then that narrows your search. And so your search, for example, high risk would be regional towns, flood, generally flood, but the potential and the upside is huge. And so if you get it right, low risk would be more secure, medics or dentists, where the 10, 15, 20 years, where the strong tenant in the city, where you've always got demand. Yeah. So first question to the investor is, where do you sit in the profile? Once you understand that narrows down your search. And then it's about the fundamentals will always be the same. What's the economic environment? What's the town? What's the town doing in terms of growth? Is there investment by the government? Are they building infrastructure, hospitals, education? And so that just tells you that they're investing because they can see 5-10 years there's population growth there.
Yeah.
And if there's population growth there, business is always going to be there.
Yeah.
So start with that, and then you can go down to the micro level. Once you find those areas, then it's about locating the right tenant, the right business use. And what makes sense for me over the years is diversification. So, if the property can be diversified into other things, as like an empty shell, can it be for a hairdresser or a beauty salon, if it can be mixed use, or if you can see the potential of actually doing some further work on it.
Yeah, doing an uplift.
Yeah. Divide the unit into two.
Yeah.
And I've seen it many times before.
Do you favor a certain type of commercial?
Yeah. I do. And it does evolve and change. So, I've been known more on the high risk profile. So high risk profile, I've invested in regional towns where there's flooding, and we've had flooding incidents.
Yeah.
Do they all work? Not all of them, but on average they do. So I'm on the high risk side, and I specifically look for properties in that area which hit my profile. I'm started to now diversify into other, which is a bit more secure, a bit more metro base.
But even with your, for flooding, there's risk mechanisms that you can put in place, like insurance and things to kind of mitigate that.
That's right. Yeah, that's right. And we've got I've had an instance where there was no flood cover. It was one of the biggest mistakes that I've made in my commercial journey. And it cost me a lot of my savings. What I learned from there is that the importance of due diligence, and also making sure that you've got systems and you've got a team of property managers who are taking care, more active. And once you, it's a sleeping pill, isn't it? So the way it works in commercial, which I really like, is that you as the investor give a facility for the business to thrive. But most tenants, if the lease is structured well, they actually pay for the insurance.
Yeah.
They'll also pay for the rates. Yeah. And they'll pay for the actual uplift of the unit as well. So it's a very different type of investing, in which a lot of the effort is on the business, whereas in residential, I found it's actually the other way around. So that's
onus is on the landlord.
Onus is on the landlord. So what I find very attractive of that is that you do want the businesses to thrive.
Yeah.
And some of the deals for longer leases, we've actually gone 50-50. on uplifts, or we've helped them with a rent-free period, or gave them some incentives to incentivize them. I've now started to offer all my tenants business consulting, so with myself and my team.
Oh, that's such a great idea.
Yeah.
Especially your background as well.
Well, that's it. And I'm passionate about helping our businesses thrive in that area, because that is good for everybody.
Yeah.
So I think we've done it to 2 or 3 tenants already.
Yeah.
And we've offered it to all our tenants in our portfolio. So
if they do well, their neighbors will do well, their suppliers do well.
That's it.
Their chains do well, their staff do well.
That's it, exactly. And then they invest in that area for longer. Everybody starts to thrive, and it's your little impact to that business, which is more of a ripple effect.
Yeah. That's amazing. I love that. Can you walk us through the process of securing your most successful commercial property deal?
Yeah, well, it depends on what we call success here. So I've got property in mind. The one thing that I've learned is building relationships. So I've built relationships with a lot of the local agents. And once you do that, then you tend to be favored by the agents, and that you're a serious investor.
Yeah.
So you know that you're not a tire kicker, and you get a list, you get shortlisted.
Yeah.
So number one, my advice is build the relationships in the areas that you want to. Find out who's the best selling commercial property agent.
Yeah.
And build your relationships straight from the get-go. So that's really important. Now, because I did that, I got a deal that we closed in 3 days over a weekend, which yielded 13 to 15% a year one. And
wow.
that didn't even go to the market. I got an email that day, I think it was 4:00 on a Friday, saying the price had dropped quite significantly. The landlord wanted out. I flicked it to my solicitor. Within the Monday, we had signed papers. We agreed on the price, and then we started the due diligence. And so that was probably the best yielding, and it's a multinational
tenant. Yeah, amazing.
Yeah.
Was there any uplift strategy in that?
Didn't need to.
Oh, because it was bought at such a
It was at a great yield already. It's just it's a standard office with a lot of land space, and it offers just land for like
future development.
Quite in that, and also quite in like the company that occupies has big industrial.
Oh, they need it.
They actually need it. Yeah, to park their big machinery. Yeah.
Wow.
So that was
well done. 3-day deal.
Yeah, that was hard. Well, it was good, and it's been rewarding since.
That would make me sweat bullets.
Well, yeah, like I said, I think step one, identify where you are in the risk profile.
Yeah,
and then you can narrow down the search. So if that makes you just start removing the stuff and helps you develop the one asset or the area that suits your profile.
And we've been saying yield quite a few times, but just for the benefit for the audience, like what is a good yield in commercial?
Look, the yields have dropped since when I started. So I started this journey 2018 and 19.
Yeah.
Now in today's term, 24, we will typically getting yields 10, 12, 13, up. Now, same area, same location, you get 8%.
Is that because the market's maturing, or is that because of interest rate?
It's both.
Yeah.
Yeah, we had COVID, obviously, that sort of fundamental scared a lot of businesses, a lot of investors, because now you can work from home. You can do other things with your property. That was one.
Yeah.
Interest rates the interest rates that we saw post-COVID, I don't know whether we will ever get that ever again. So it's a combination of various things. And I think, people are still wary about, what the future holds for certain type of commercial property
investments.
Yeah.
Yeah, I hear you. Yields around that 8 or 9% is magnificent. What's an average?
On average, you'll get probably, I'd say 7.5. If you get a 7.5 with a good tenant, like a minimum 3-year lease.
Yeah.
Solid tenant, solid business, someone who's experienced. Then I think a 7.5 is a good investment. Obviously you got to work out your spread based on what you pay in interest, and also how much deposit you're putting in.
Yeah.
So for example, if you invest in a petrol station, it's normally the bank won't lend you the full funding, obviously. It'll give you a 50% LVR. So you got to put in the other 50%. So your return is good.
But that's because you put in the
difference. Yeah. So your return on equity versus your return on cash is different.
Yeah. So what strategies have you found most effective for managing and scaling a commercial property portfolio? So in resi, it would be a little bit different. You're either buying like high growth properties, buy one every year, or you're buying, land banking, developing. What are the strategies for commercial?
Commercial, very similar concept in which you look at a commercial that has going to be appreciation and valuation. Again, I'll go back to the fundamentals, area, the tenants, how long the lease is.
Yep.
If it's multi-tenant, banks like that because the WAL is good.
Yes.
So that's really one of the things that we look at. And when you have that with leases in commercial, you always have increases. So it could be 2, 3, 4%. Banks love that too. So it's sometimes they're indexed to CPI. So you're not going backwards. And so what happens is your yield lease is neutral with CPI, or if not, it can be better. The second thing is that you get the revaluation done by the lender.
Yeah.
Doesn't appreciate sometimes as fast, but I think that's a myth. In my experience and what we've done in our portfolio is that we've done valuations every 2 to 3 years.
Yeah.
And, we've always used the equity into our next investment or to other things that we want to use it for.
So if you could just forget 2 or 3 years, wait for that uplift, and then you cash out that deposit and then go again.
Yeah, that's right. Interest, and the thing with the commercial, again, it's you make money from day one. And so as you receive income, it pays the interest expenses. You've got money left over. Even if you get more equity, it still covers the additional rent.
Yeah.
So,
and especially as your income increases as well.
That's right. Yeah, that's right. So I think that's definitely one strategy. The other one is I've heard some buyers agents do syndicate deals. So if you don't have the equity you can be a unit holder for a syndicate deal, which goes typically you buy in a good area, big investment, and then they do an uplift after 3 to 5 years. You get the income per year, and then you cash out after 3 to 5 years. And so that is a nice little investment if you want to tippy toe into commercial property that I've seen.
And not put yourself at such a large risk.
Yeah, that's right. That's right.
Where can people find these syndicates?
Look, I've worked with Heron Terrain at Unicorn and Stephen Johnson. They're doing some large deals. I'm invested in one of those deals.
Yep.
They're probably one of the best that I've seen in the marketplace, and I haven't seen anyone sort of do at that level.
Yes.
Yeah.
Challenges and growth. So I think this might tie in, but what are some of the biggest challenges you faced in commercial real estate? How did you overcome them?
Challenges would be, tenants deciding they don't want to extend, or vacant premises. That's the typical biggest problem or challenge for any investor. And what do you do about it? I've had some uses where it took 12 months to find a replacement just because where it is. Yeah. And so, would I do that again? I would. That was my first investment. So
that was the one
that was the first
original one.
Yeah. But I had enough income to cover my cost anyway from the other 3 tenants. So it was a multi-tenanted use.
Yeah.
So that's the biggest concern. Interest rates, obviously, if they're going up.
So I'll just rewind to that. So it was one asset, but you had multi-tenant. So one was vacant, but you had income from the other tenants to cover. So you were spreading your risk.
That's right.
Yep.
Yeah, that's right.
Great strategy.
That's why I like multi-tenanted properties. Yeah. We've got another one at another place in regional.
Yeah.
And this one is on a busy street. So when a tenant decides he cannot continue, it's taken probably 4 weeks to get a replacement, and I think that location plays a huge part in commercial too. So I think that's probably the biggest one. Tenants may also not pay, so that's another issue.
Have you experienced that?
I've experienced that, and
because the business owner was actually struggling or health issues.
Yeah, so COVID, for example, taught us a lot. The government were left, depending on which state, left the investor up to the tenant to have that relationship and saying you can do rent-free period or work out.
That's when they did the.
So you didn't. Yeah. So it wasn't like you go in and no rent.
Yeah.
You agreed that you either can do and subsidize it, or you can say, don't pay rent for the next 3 months. How well we'll cover it once things have been established or opened up.
Yeah.
And so one of our tenants in regional, we did have a conversation. One of them said, no problem, we can still pay. We're not impacted by the restrictions. One of them did ask for, some leniency, and we actually gave them a month off. Like, we didn't even charge. And then we agreed after 6 months that they can play catch up. So, that's one. The other one is that they might go, personal issues. We've had personal issues where it's, personal matters. They can't work. Therefore, they can't pay the rent. Business is down. We've negotiated to say, look, that's fine. And then we'll work out what we need to do. Now, the biggest learning that I'll get your listeners or investors is that you have systems and processes. And what does that mean? Having in your diary when expiry dates are coming up, and whenever there's an arrears, that you pounce on that pretty quickly.
Yeah.
I tend to reach out to my tenants on a frequent basis and saying, how's business going? And if they're struggling, we have a conversation about the business. We talk about, what's the struggle? What's the challenges? We do a deep dive on the business.
That's when you do a bit of coaching.
That's the consulting side of the business. And a lot of the business owners have a very similar pattern of why they're experiencing problems. They're in the business, not on the business, and they're doing everything. They're wearing so many hats. They're doing the sales, the marketing, invoicing, the social media.
And they get burnt out.
They get burnt out. They should be on the business. And some of the businesses we've instructed that, look, let's just handle your systems and processes. Let's just get an administrator in there just to manage that while you work on the business. And we'll give them some mentorship around that. So, through partnerships and collaboration.
That would be a massive relief for somebody who needs it, but doesn't know how to.
Yeah.
And I think, letting go is a big one.
It is one of the biggest things that I can see that most entrepreneurs have is that, and I see it all the time. I was there. No one can do it better than you. No one can do the attending to clients better than you.
Understands the process. Last year, you created them.
Yeah. Well, that's it. And so that's the letting go, like you mentioned, is a key, and that's a mindset thing. And then to be able to hire really well. I was on a call with one of my mentors, Aaron Sansoni and Richard Branson, last 2 weeks ago.
Wow.
And Richard Branson said something that resonated, which is pretty much the problem most business owners do have.
Yeah.
He said, just have a strong vision, have your North Star, and then hire really good people. But you need to hire people. Now, Richard Branson lives on an island, and he's, has 400 plus businesses, and he looks pretty relaxed to me. He's not in the business. So, he's doing really well. So, we just hires really well, get out of the way, obviously make it fun.
Yeah.
And invest in your people too.
Yeah. And that's amazing that you, through that hardship of your tenants, you're also being able to help them out through another channel, get them back on their feet. I think we touched on this already, but how do you approach risk management in your investments, especially in volatile market conditions, which I think we've actually answered it already, because you were saying systems, processes, and just being ready for it.
Yeah, so risk is really important. So managing your risk. So it's, step one, know your risk profile. So high, medium, low. Now, if you're high risk, it means that that's fine. You can mitigate it.
Yeah.
So what are the insurance?
Yeah.
So what insurances do you need to protect yourself? The lease has to be solid. So what's the arrangement between you as a landlord and a tenant? Knowing the obligations. The other one is also due diligence. So that's key when you're buying a property. So I wouldn't underestimate the importance of due diligence. So when you're in there, you do need a team. Don't try and do it yourself. Try and hire the right people who have got that experience and know what to look for from the from the business to be able to work out what you need and then make an assessment on it. The person who's selling the property wants to just gets the best price as a broker, but there's always skeletons that you can uncover. And so that due diligence is a risk mitigation strategy when you enter. Once you're in there, systems and processes, and just checking with your tenants, just a relationship building. I tend to, when I first started, do not want any contact, and I'll have a property manager there. But what I've realized is that so when you need to have a deeper dive and help a business owner, they do actually need your help. Yeah. And if you've got the expertise, the team, I think that's part of my fulfillment is just to reach out and see, just to check in. I'm just not someone on the other side, actually a real person that exists.
Yeah.
Yeah. So I think that human element has taught me to lean into that.
Yeah, I think that your tenants will probably appreciate that as well.
Yeah, we've got good relationships with them, So it's a respected relationship.
Yeah.
Do everything. It's a respected, fair relationship. Are we best friends? No, and you don't need to be.
Yeah.
It's a business relationship.
Yeah.
We know our obligations. They know their obligations, and if they need help, put your hand up.
What are some of the mistakes you've made along the way that you're like, oh, if I knew that in the beginning or somebody told me, I could have just dodged that one? Do you have any of those?
Absolutely. I think you need the foundation. It starts with having an outcome, reverse engineer the outcome. Step one, mindset. Where's your mindset at? Are you looking at scarcity or your abundance? Are you fear procrastinating or are you driven to succeed? I think once you know that, then the strategies will appear. The strategies, because now it's abundant, now you're driven, and the outcome, your strategies will come. And it's the sequence of the strategies. And there's no shortage of strategies there.
Yeah.
Once you get that pillar done, then it's just creating an action list. And so creating that action list, and then the outcome will come. The lesson that I learned may seem very basic, but just be very clear on what you want and why, and avoid saying yes to everything else. Just say no.
You need to be laser focused.
Laser focus, yeah. Laser focus, because there's opportunities everywhere. And, one of the things that I've learned is if you hang around someone who advertises Bitcoin, they'll just talk about Bitcoin or how great it is.
Yeah.
And then you hang around with someone who's great on shares, and they'll talk amazing how shares are.
Yeah.
And then you want to buy shares. And then, you may be talking to someone, businesses who wants to buy businesses. They'll just talk about businesses. So be very clear what works for you and why. And then find the mentor, find advice, get educated, get your mindset right, and then things will start to flow. That laser focus that you mentioned, you get to say no to a lot of things.
And then you can say yes after you've hit your target. That's when you diversify.
That's right. And just do one thing really well.
How do you balance your multiple sources of income with managing a real estate portfolio?
Well, the mindset, first of all, is, I've always worked for a corporate. I actually quite enjoyed it. I worked for the big banks and so on, and we had a really good team. I was fortunate in my younger years to have really good leadership, and I learned a lot from that. But what I learned is that you're capped, you're limited, and you want to do your own thing. So I think when you look at it, most people want freedom. You want to be in control, and you want to write your own chapters as well. So for me to break from that to the entrepreneur or the business, I needed to find a strategy on passive income. How can I get income while I'm sleeping, or if I'm sick, or if I'm traveling, that comes into your bank account, that gives you your assurance and a sleeping pill that your obligations will be sorted. So that was a big mindset shift for me.
Yeah.
And that allowed me to then grow into, commercial property, and then look at diversifying the income. So, we've got residential property, we've got commercial property. Now I'm in the business of looking at buying businesses. And so commercial is fantastic. I'll always be a commercial investor, but the investment in businesses, you can actually scale a lot faster, and you can actually generate more sources of income. Yeah. So you can, businesses, you can do 20 sources of income. And if you can do that, the compound return can be quite, over time, a lot faster to your goal. So, it's typical. You can grow a business 20% in 1 year.
Yeah.
Even in a quarter.
Yeah.
And so you can't really do that with resi or commercial, but it's good to have assets. So
everything starts with assets.
Yeah, that's right.
So we need leverage.
Yeah. Well, that's how you build wealth over time,
Yeah.
And that's how you get to keep it too.
Yes. And that's when you start building, what do you call it? Generational wealth.
Yes, I love that word, generational wellness. Yes.
Yeah. What role does mindset play in building a diversified and resilient income strategy?
It's number one. It's like, if you don't have your mindset right, you have to get it right. I've learned over the years the power of the unconscious, and what I've realized that we've got programs that are running from, it can be from your parents, the programs from school, programs from your mates, your relationships. These are programs. And, look at what your identity is for wealth. Like, how do you see money? Like, that was my thing, and when I started to write it down, I had a program running that anyone who had money was evil, or anyone who had money was corrupt. And so imagine trying to build a portfolio or income when your program is saying completely the opposite. So it starts with that. I learned and invested a lot to be able to uncover that, reprogram. So write a new program, and you could do that very easily with, breath work, meditation, obviously mentor. And that's my unconscious. Once the reprogram was there, it became effortless. It just come, deals would come, the right calls would come, the ability to get property came at the right time. And so you were just working because your mind and the unconscious are all aligned. There's no conflict.
You're tapped in.
Yeah. And you're tapped into, the higher mind soul connection. There's alignment. There's no sabotaging. There's no restriction. Well, why it doesn't feel right or see right?
Yeah.
And so and you're right. It starts with that.
And I think, one of the key messages throughout this, interview, you've been saying mindset, get your mindset right, get the strategy right, know your risk tolerance, those things, What trends do you see shaping the commercial real estate market in 2025, and how can investors prepare?
Yeah, look, it's $1 million question, isn't it? Or $1 billion question, So, yeah, look, what I'm seeing in the trend for 25 and beyond is, corporate responsibility and sustainability. So, there's an element of the business who are invested into that. So that's really interesting. It's something that's multi-tenanted or multi-use, allows you to have risk diversification or risk mitigation.
Yeah.
So you can then tap into that. And also, tapping into advisors, people who do this bread and butter every day, who are close and got the relationships and trends and so on. Go to events, start to network and build your own network of knowledge.
Yeah.
So when that opportunity, what's good for you.
Yeah.
And so I think that's what I would recommend for 25. I think, would I invest into offices? Because, unless you can diversify that office into something. So always look at what's second, third, what can you do with that?
Yeah.
So start looking at, I think these are the trends that are happening. Storage seems to be very popular in 25, so we got families and people who, have accumulation. It's very hard for a mum or dad to let go of something that's emotional. So built over time, I see that storage is going to be something to look for. And so anything that relates to land, even doing some storage sheds, will give you some insights, because the population's not going to get lower. It's going to get higher. We're consuming a lot more. Amazon's in our face. Social media's on our face. So it's easier to buy things. And it's very hard for the emotional side to let go.
Are you saying we all have a little bit of hoarding tendencies?
Yeah, you look at the data. I mean, even myself, Charity, my wife, she's a beautiful wife and wonderful. It's very hard to let go of things, and I understand that. So I have storage myself. But look, that's the trend. That's my personal experience. Yeah. And I think that's where, people say hoarding. You just accumulate things. You just accumulate a lot of things. So yeah.
And you're probably right. A lot of people, I know friends who have used storage sheds. You're moving, you're changing lives, and it's a need. And if you look towards America, like storage sheds is just the common thing. And you look at America, population 400 million, just Google storage sheds on there. That's it. But yeah, you reverse engineering those numbers.
That's right. Yeah. But you've touched on a really good point. We tend, Australia, what are we, 25, 30 million people? Yeah. We tend to follow places like America. So whatever's happening there 5, 10 years, it's always a good insight of the landscape of what's going to happen here.
Yeah.
So that's a really good insight and I agree, tapping into that. What's happening over there?
Yeah. And it's just eventually it's just going to trickle through. Yeah. Like, look at Halloween.
Yeah.
Halloween was never a thing here.
That's right.
This year was a thing.
That's right. That's right. Well, this is where I see the entrepreneur, the business owners. And I think this is where they take, the creativity. And I got to thank these investors, entrepreneurs. They create an opportunity. And so sales and marketing is really key, tapping into that. And I think this is great. This is great. What can you create from something that leverages from another country?
I agree. It also helps. There's more consumption, but it does also help the economy, because everybody's having a good time. You need to spend money, go enjoy yourselves.
You're right. And I know we keep looping back into mindset. Where's your mindset at? As a business owner, I'm always like I always congratulate business owners. I saw an entrepreneur who had a T-shirt at a grand final of football. He had 2 types of T-shirts, the one for the winner, both for winners, and had it ready because obviously he had to have the shirts ready for the game.
Yeah.
And that's an entrepreneur. They see the opportunity. There's a calculated risk.
Yeah.
But I'm sure he would have got the benefits because no one else is thinking that way too.
There was no mistake. Either way, he's a winner.
Exactly.
Now, how can aspiring investors or commercial investors set actionable goals and build the right mindset for success in maybe property investing this year?
Yeah, I love your questions, Scott. I always say start small but think big. So set yourself up for success. Do tiny wins and allow yourself to succeed, because we have again, the mindset is that if the goal is too big and you go for gold straight away, 9 times out of 10 you will fail. Then you're teaching yourself failure.
Yeah.
You're actually teaching your mind that you're not good at something, and you're tapping to the self-worth, which is actually something innate in all of us. And so start small, measurable goals. What are the 2-3 things that turn up the dial today that are small? Yeah. And it might even be, I'm going to go for my walk for 30 minutes. It oxygenates your body, clears your head. You get vitamin D naturally, and you're already starting 90% better than everybody else.
Yeah.
And so that energy is useful because now you've got the energy to do action number 2. Your self-worth muscle starts to develop over time.
Yeah.
And what we learn from the brain, the neural pathway starts to develop and becomes a habit.
Yeah.
And so that, do that for 21 days or 40 days. Now it's a habit. What's next? And so being able to have a clear action, know what your outcome is. People talk about Pareto principle. So what's the big things that will move the dial? and start to look at that. So just write it down.
Yeah.
People use it. I use electronics, but just commit to yourself on paper. What are you going to do today? One big thing today that moves the dial.
And some of those actionable, steps for a aspiring property investor would be maybe, doing some research, finding a mentor, or it could be understanding more about commercial property investment and the strategies involved in it.
That's it.
Yeah.
I like that. Yeah, that's right. You could add to things like, I like the mentorship. It's a pattern.
Yeah.
The success that I've had hasn't been from me. It's been from somebody that I've paid who's already had the failures, the experiences, who already been in the trenches, and that's what you pay for, to avoid those mistakes. So you can fast track and accelerate it. Find that mentor. I did that for commercial property. I was fortunate enough to know Dibna Bellholt.
Yeah.
She led me to Helen Tarrant, and that led me to other mentors after that. So, start and then invest in, your knowledge.
Yeah.
Invest in things like your mindset, strategies, and then involve yourself, immerse yourself. Go to a boot camp for 2 days, and you're going to have like-minded people. Yeah, you're going to have like-minded people. You're going to talk the language of commercial, and guess what happens?
You just become.
You're
swimming with the same. You're swimming with the same fish.
That's it. Exactly. You are the 5 people that he's around. We've all heard that saying before, and it's so true. People who say it doesn't affect them, it does.
Are there any books, tools, or resources that you recommend people to look into or read?
Yeah, I would look up the commercial property investing from Helen Tarrant. She talks about the different types of commercial property. She talks about some case studies about it, her own personal experience about it, and I've learned a lot from that. So use those books. That's a really good book. I would also, even just, Rich Dad Poor Dad.
Yeah.
Just something that allows you to understand, how to structure.
Yep.
And cash flow comes in, expenses, and then you got your profit. I think that's really good as an investor. And then probably they're the 2 main ones. I think the one that influenced me was probably not relevant may not see relevant for property, but did influence me. There's a book called Dale Carnegie. I'm probably not pronouncing him. How to Win Friends and Influence People. So once I knew that really shifted my psychology of how do I win friends and influence people. You do have to influence people. You have to influence not only yourself, you have to influence the broker, or you have to influence the landlord or the tenant. And it's a skill that will take you, whether it's property investment, whether it's retail or commercial or businesses or anything that you decide, you do have to work with people.
Yeah, absolutely. And influencing is not like, some people might see it as a negative, but it's actually not. It's really, if you think more around, it's more building relationships.
I love that. Yeah, I love that, Scott. You're right. I've heard the word manipulation, and that word is tainted all over in the office, in corporate office. If your values and integrity is solid and you always look for the win-win, you have an obligation to influence the other person to create. As entrepreneurs, you create an opportunity that both parties or whoever parties are there win.
Yes.
And that impacts your brand. Yeah. But also, when it's in it for everybody wins. It's a no-brainer. If it's just a one-sided transaction, it's not very...
Nobody wants to do it. Everybody can see.
Exactly. You're going to get resistance.
Yeah.
Yeah.
What's one piece of advice you wish you'd received at the start of your property journey that you want to share with everybody else?
Yeah, look, I think for me, there's so many that I can think of. For me, if I would to advise myself back then, is to be very clear on what you want and why. I didn't know, I was always chasing the vehicle, but never the outcome and why. So, people say it's not the pursuit of money, it's the pursuit of what money can provide you. Yeah. That allows you, and it's what does that provide you? It provides you the freedom to do the things that you want to. Yeah. So if I had that advice at the beginning, that would have been a lot easier because your motivation can only be temporary.
Yeah.
However, that feeling to be able to know why you're really doing it for the first place, and it changes for everybody.
Yeah.
It could be that you want to build schools or education.
Yeah.
It could be that you want to, obviously, you can buy a big house or you want to travel the world. It's different for everybody. But the tools to be able to know why you're doing it, I call it the outcome of the outcome.
Yeah.
So do I love commercial property? Yes, I do. But it's what it gives you. It's the outcome of that outcome.
Yeah. It's what the income provides to you and what you can do with your life after.
Well, yes, exactly. So
the choices you make. Yeah.
That's it. So that's something, look further beyond just that.
Yeah. Any last passing thoughts you want to leave the audience?
Oh, look, I think I think it's a land of opportunity. I think we live in Australia where, we don't have those restrictions in a way that you can feel empowered. Number two, really take action. That's all it is. Just take action, but take it, with purpose.
Yeah.
And also, connect with me if anyone wants to reach out. They're a little bit scared about commercial property or they're not sure.
Yep.
They want to do a deeper dive. Just reach out to me on LinkedIn.
Yep.
And then I'm sure that we can, with my team, we could schedule something in the calendar.
Yeah.
Just to see if that works for the, works for them or not.
And going on, if people do want to reach out to you, where's the best place to reach out to you?
I've got my own website. So, just look me up, sergiozambrano.com.
Yep.
Or LinkedIn is quite good. So Sergio Zambrano, MBA.
Yep.
Reach out to me or even through yourself, Scott. So, I think it's not knowing what to do next.
Yeah.
That's where
just getting somebody to point you in the right direction.
Yeah, that's right. Just give me you don't need to know all the answers.
Yeah.
You don't need all the answers at the beginning. All you need to know is just a little bit, like 2 or 3 steps ahead. Obviously have the bigger picture in mind.
Yeah.
But just take those first few steps. That's what you need to focus on.
Thank you, Sergio.
Oh, thank you.
I love this podcast, and I hope you all got a couple of gems out of this one, especially in commercial property, what you can do. And I think one of those big mindset shifts is in commercial, you are doing it different to resi,
yes,
where you are, negotiating the deal. You've got time to work out your finance before the deal is actually done. So if you're looking at getting into commercial, reach out. Sergio is available to answer some questions, but don't be afraid to take the next couple of steps. Thank you.
Thank you, Scott. And thanks, everyone.
Thank you.